Hey everybody, this is the weekend silver video, and this chart is silver priced in pounds on the London Exchange. And what I like about the formation on this particular chart is from the starting point up towards the high in 1980, it's developing a bowl sort of shape format. And it does seem as if that it wants to retest the highs from 1980 in the next significant period of time. How long significant will be, I'll let time decide that. It consolidated very nicely in this time period here, where we can see that the 1000 period moving average was used as support resistance along the way, finally breaking free from that area in about 2005. The moving average from the all-time highs was resistance on one occasion, and here it was resistance again, resistance in here, and then it was this breakout that got us to the higher highs. As far as Fibonacci is concerned, from this high towards the lows down below here, the first level of Fibonacci was taken out back in 2006 or so, and the second one was taken out in 2008. We are above the level. And the thing about silver is these highs are roughly over 2000, and well, we're at 1250. So getting to these highs is like having a gain of 60-70%. And with silver, that's not that massive of a move. After all, if we take the lows from the 1972-73 area of roughly 50 on here, to go from 50 to 2000, comparing these lows here of 250, that would be like going to well over 10,000, which would work out to over $1,000 per ounce if this, most likely, if this goes over the 10,000 area. This is silver on the daily chart, priced in US dollars. And in this chart, we have seen the major moves from top to bottom, 2135 or so. That's the intraday high on the silver on the daily chart. The low is about 8.5, 8.75 or so. And all that was in the same year that's seen a major move towards the downside, and that was with the financial panic. We've seen stock markets getting crushed. Everything was just in a free for all. People selling whatever it is that they could. And we were trading within this range of roughly 16 and a half to upwards to even 18 and three quarters to 19. And well, we're back within the same range that we encountered in 2008. It has developed a massive resistance field at roughly 19 and a half. The more often that resistance is tested, the more often that it is taken down. You had a test in here, another test here, and we've just had yet the third major test of this 19 and a half level on silver. The moving averages, the orange line represents the 200-day moving average, which has been very nice support. This yellow line is the levels from the low, the nominal low in '08, and since this level here, the running average from the '08 highs was resistance then it has managed to get above it and find support at that level. As far as some key Fibonacci levels to be aware of, the Fibonacci from this high and towards this low gives us a Fibonacci level roughly at around 15 and 12. 15 and 12 are the key ones, so right around in here you can notice that there was a little bit of resistance towards that area, and then again at 12 or so is the second Fibonacci level. So we're above this 15 level, which means that it is remaining a little bullish right now, but it's still in a time consolidation over the last year or so now, and a breakout towards this level. First key level would be this test of about 21, and then you could probably look towards the 24 area as the next potential resistance. But because it's been held down for so long, or because there is a lot of manipulation in the market, a lot of volatility with price action, that having significant price gains over a shorter period of time is really not that much of a surprise. This is silver on the hourly chart using the code SLV. An SLV is an ETF. It tracks or mirrors the price of silver, and it's roughly about 3% lower than what the spot price happens to be. Therefore, it is a piece of paper. Now, Johnny hates the NWO user states, I like silver because it's not made of paper. Where if you buy SLV, it is made of paper. And I'll be going through many other different users' comments throughout this video, most of them near the end. And when you buy this ETF, you're buying a piece of paper that mirrors the price of silver. It's a mirror. And if you are in the mood for trying to potentially gain fiat dollars based on a belief that the price of silver is going higher, then most likely that will come into play. And I do think that there's going to be problems based on the confusion that many people believe that SLV means you're getting silver, and then throughout the futures market, a fractional reserve banking system. However, as far as looking at this intermediate chart, which is the hourly time frame going back to April the 8th, we are in a choppy, rangy market. And we are on the lower end of this range. And where is the middle? Well, where is this moving average located right now? And where is this moving average located right now? The moving average from the May 5th or 6th lows is roughly at about 18, and the moving average from the high is roughly around the 16th of May, have come along and are at this 18 area. 18. Therefore, it is the middle of the Fibonacci, or somewhere around the middle of the Fibonacci, between the 1780 area, which is the level from this low and this high. The next Fibonacci level is about 1840. So it's trying to get above this key Fibonacci level. You can make a case that this is the uptrend in here. If it can get above that, then maybe it can find some resistance at this 18 moving average. It's an area which we had many different encounters of resistance and support before. However, it is in a choppy market. It's going to have to break to the upside or towards the downside. And if the stock market is going to get hammered, or we have a repeat of 2008, And Dow goes down to 9,000, 8,000, heck, even 7,000, 6,000. It really is anyone's guess what the price of silver is going to reflect. It is an extremely volatile market, which is why a breakout of this range has to happen sooner than later. And if it does take a big hit to the downside, it's all based on the intrinsic use and the purchase of the silver metal, at least from my belief, and the hedge against inflation, the hedge against manipulation, is that a lot of these prices are maneuvered because it's a paper Ponzi scheme. And when you have the real metal, you still are involved a little bit within the paper Ponzi scheme, but not as much. And if it does go down to levels back again towards 12, 13, 14 an ounce, I really believe it's an amazing buying opportunity because you cannot hide this economic collapse. You cannot hide the fact that dollars are printed out of thin air and how much this market has already been manipulated to the downside over the last so many decades. We are looking at the Dow Jones priced in silver, and we're going to look at this on multiple different time frames. Multiple. And we've seen some big moves. 1980, January 18th, this chart, 1745. There really shouldn't be a dollar sign on that one. No. That's because silver was 49.45 per ounce and the Dow was 867. I divided these two numbers. You needed 17.5 ounces of silver to buy one share of the Dow Jones. On May 16th, 2001, this chart got up to 25.87. Silver was 434. The Dow was 11,216. Silver was even below 4 on many different occasions, and well, since this point, the Dow's down about 1,000 points, and silver's up a heck of a lot. But it moved from 1754 up to 2,500. That's like a gazillion percent to the upside, sarcastically speaking. And if we take a look at this 1,000-day moving average, which was a level of resistance in here, it got above the resistance level right in like 81, 82. Then it found support, 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 resistance, resistance. So we've seen that the 1,000-day moving average has been a good level of resistance. It's been tested only twice during the bear market. Once on the immediate move lower, and then more recently with the 2008 highs. And I'm going to show you this better on a shorter term point of view, but it's continuously been making these lower lows, and for that matter, the lower highs. The moving average, the orange line, which is from a running average from the 1980 lows, was met as resistance in this area here in 2005. Broke below it. It's finding resistance at that point now. It was also an area where we had the first Fibonacci level, the 23.6, as we can see here. We'll say 800 even, which means that the next Fibonacci is 385 or somewhere around here. And theoretically, this is still bullish. This is still very, very bullish because it is above this key Fibonacci level. And even though it's went from 2587 down to 500, which is a quite significant loss of like 80%. That just shows you the volatility that silver really has and how much more further this has the potential to go towards the downside. Looking at the Dow on a shorter term time frame, this is a daily chart going back to the start of 2007. And there's two moving averages. You have the black line, And the black line represents the 200-day moving average, and the reddish looking line represents the 50-day moving average. And early on within this chart, it developed a support level of roughly 800 and change. It managed to come back to this level during the 2008 fall rally on the stock market, but it didn't hold this rally in here, that is. And oftentimes, from failed moves, can create a fast move, and this was the fast move that ultimately made lows that we haven't seen in quite some time. Therefore, why did it rally in September, October of 2008? Well, it really didn't rally. The Dow and dollars got tanked, but silver was hit even harder. Sort of like that manipulation that I was talking about. But as the price of silver was starting to rebound in the later stages of 2008 into 2009, the Dow Jones wasn't. The Dow Jones was making lower lows that hasn't seen in quite some time, while silver was recapturing its previous levels. This was back towards the time frame of late 2008 and into 2009. You can see here that the Dow, got hammered. So therefore, we are now in a range-bound market more than anything. And this is the range in here. We seem to have a big level of support, roughly at this area of about 570 or so. There's a big level, and we are coming up to this resistance point right now. This is the Dow priced in silver on the 30-minute chart, which goes back to the earlier part of May of this year. And it's been in a downtrend as the Dow was losing priced in silver on so many different time frames over the last decade. And on the shorter term trend, it seems as if it wants to break this trend line, which has connected many different points. Well, in fact, it's already broken the trend line. The question is it able to start any form of significant rally from this point here to this bottom? It has came up to its first Fibonacci level of 655. The next one would be upwards to about 590. The 5-day moving average, which is this orange line, is very important based on the direction that it is trading and where it is. When it's lower and it is below the 5-day moving average, it is very bearish, and you don't know how much lower it can get. And one could say in hindsight, well, this is a bottom in here, therefore this is where you'd want to go long. That's in hindsight. It could very easily fall into below 450 or 460. But the 5-day moving average has crossed over, and we've got a trend line now that can connect these different areas in here. However, that's on the intermediate term time frame. Finally, we're going to take a look at Dow Jones on a super long-term point of view. And the lows that we were talking about from 1980, when we're looking at the yearly average, seem to be the all-time lows. And the highs from 2001 seem to be the all-time highs. And I've heard this saying, oftentimes when failed moves can create fast moves. Failed move to the downside created a fast move to the upside. Failed move breaking the significant resistance could potentially give us a fast move again to the downside. overall, it seems as if the average that silver has been priced in is this orange line, which right now is roughly at about 450 ounces. It has been above it more times than it has been below it. Whether it's an area that will find a level of support, that's tough to say right now. And often because it broke by this resistance point of 750, it found nice support at previous resistance, but it was not able to hold on to its massive gain. That's what gives me the indication that the failed move could create the fast move. Charlie Fuchs, I probably said that incorrect, but what he states is that I love when people make charts based on inflation. I do have a question. The only thing we will have to look for is high taxes in the future for precious metals. What do you think? Black market? And I want to start off by answering it with the final part, which is that of black market, because that's a very interesting little word. And we'll assume that the word black is for its evil, negative, poor, bad type of characteristics. We are told that the black market is when people will sell something sort of like on a street value for drugs they state are sold on the black market. And when we have manipulated silver markets, and it's not just in silver, but in so many different areas, then how can you consider that to be black? But as far as where I feel we are going towards, I would say in towards a barter system that many would consider to be that of a black market. As far as the high taxes, I'm hearing that there is a VAT tax in Europe or parts of Europe, maybe in Britain, and to me that is black in itself. And I believe that they will try, powers that be, that is, to try to do whatever is in their best interest, and taxes may be part of it. We are right now paying a large amount of tax, and that's when I look at this chart, which is an inflation adjusted chart, to me it just doesn't give me the true inflation. It's the BLS, which is the Bureau of Labor Statistics, and it might be a BS data that is coming our way. For we are getting close to the middle part of this chart, and, well, we would be at levels not seen, not including the 2008 highs, that is, since 1985. The moving average from the highs in 1980, we are now above it, and it's starting to roll over. This orange line, which is the shorter moving average, I think it's along the lines of a 500 period. I can't remember actually. This was late at night when I did this particular chart. However, it to me, I just don't trust the BLS. This is the chart when you look at shadow stats numbers, and for the most part, for the BLS they are guesstimates, as this is monthly average silver prices. That's what this is reflected upon, the monthly average silver traded based on the data for the inflation. And this is a much different chart. As I was showing the BLS, Bureau of Labor Statistics, it's like believing the unemployment rate is 9.5%. Well, the unemployment rate does stuff like, well, we take data of discouraged workers, we throw this out, we do that, we do that. Well, what was done to make the inflation the rate that was stated? With that being stated, we can see on the shadow stats that we have developed this interesting trend line roughly at around 21 or so and change using $2010, summer of 2010. You can also make a case for a weird looking inverted head and shoulders pattern. There's the left shoulder, the head, the right shoulder. And inverted head and shoulders pattern are designed to be bullish or for charts to go higher and head and shoulders to go lower. Based on the length of this pattern, this can give us a price subject of roughly towards the 50 area, and that's with today's dollar. So you could see this hit 32 or 36 or 37 in the next few months, and it still isn't at that level, meaning it may have to get to 70, 80, or 100 just to get to this mark here, meaning as they continue to print money, that would continue to create inflation, which is based upon its money supply. And therefore, with this chart, we can take a look at this very interesting orange line, which is the 50 period moving average and the 200 period moving average. I think I said recently I wasn't sure what the averages were. Well, I remember. It's a 50-month, 200-month moving average. Therefore, on the way down, it was resistance. It got above it in this area here, but was not able to break above this resistance that it established at this level. Thus, the moving average gave in. It found resistance again. And this is where it was able to get above the resistance. And then, not only that, it found support at that level. In the big selling in 2008, it went below it, as it also went below this declining 200. It managed to get above it. It has thus now found support at this level again. And I said fast moves or failed moves can create fast moves. It'll be interesting to see on this chart if this becomes a failed move, because a fast move would get us to a level up towards this certain area here, would create a fast move. The Fibonacci 23.6 from this high and this low down below here represents 20.56, which is an area that we are looking to test. The 38.2 is roughly 35 or so. And this just shows you that based on the printing of the money supply that we've had, a heck of a lot printed and a lot of silver being manipulated or priced down towards this level below here. Therefore, if we happen to have people educating themselves within the real supply and demand, a lot of it's going to work out towards when the jig is up. And I say when the jig is up based on when the silver charts transition, whether it's no longer through dollars or however it is that it is done, the physical owners will be the ones that will have the smart purchases, because when it's all said and done, those who bought below this line are the ones that are going to make the smart buys. For buying silver back in here, buying the physical silver was not a good investment. It got hammered since that point of view. But when we look at the chart within the 50 and the 200, this is what a trend reversal looks like when you have the 50, which is starting to go higher. The 200 has now flattened out and is starting to barely go higher. And I really mean barely. And you got this key resistance level, which is the moving average since the 1980 highs. That's an area you'd like to see hit as resistance and then maybe come back down to this 21 area where previous resistance can become support. What I've done on this chart is I've taken the BLS numbers and the shadow stats numbers, and I found a median between the two for the given time frame. Because some may say that the BLS, it's not right. The inflation's been higher. And then there will be others that will say that the shadow stats inflation are a little out of hand. And I don't know if they are or if they're not, but the math on this takes the average of the two. And when this is the case, we noticed on the BLS that the moving average from this high that we were above it. On the shadow stats, we were below it. And collectively, it found resistance within the 2008 highs. The 50 period moving average was resistance. It was resistance trying to break out, just like on the last chart, it wasn't able to. Had a failed move above it, and there's the fast move lower. And it managed to get above it, and same deal. Question is, will that circle area become that of a fast move to the upside? This is monthly chart, so you'd have to look into 2011 to see the net result. For if you're looking at like 30-minute charts and 10-minute charts, the fast move can happen within that day or week. But this is longer term charts. And you see the same sort of pattern for the trend changing over. We have established a higher low, and now we need to get above this area to establish the higher high. It hasn't done it yet, but the move has not shown any signs for finishing off towards the upside. Therefore, if we come back down to this area here and we bottom, it would make a higher low after a lower high. We don't know what it's going to turn out yet. As of now, the trend is showing signs as if it wants to turn over, however. Now we're going to take a look at the ratio on gold to silver. We'll start with the shorter term time frames. Going back from the 8th of April to today, this is the GLD to SLV ratio. Therefore, if it says 6.5, it's about 65 and 1. You can multiply them by 10. So it closed at 6.67, or about 66 and 2/3 and 1. And what this chart has done on the shorter term time frame is back in May it had a significant move to the upside, and it has established a level or a range which is showing the bullishness on the intermediate term towards gold over that of silver. And it's in a lot of indecision within this consolidation period. The moving averages, the red line is the 5-day moving average, which is, you can see on the way down over here, resistance. It has gotten above it. Now it is trapped below it, but it has maintained a level of support roughly at about the 665 area, and in direction towards where the moving average from this bottom and this top is. So it's showing around 663, 664, which is in between the Fibonacci levels of 672, which is roughly in that area there is a top one, and about 654. So this on the intermediate term right now, because it's in this range, this is the neutral point of view. Breaking above about 67 to 68 to 1 ratio, or 673, 674, will have the ratio on a bullish standpoint. On a break below this level, it would be bearish. And if you're looking to say, well, where's the technical showing us? This is indecision big time. You can see how this level support area has held, yet it hasn't done any has not had any conviction as of yet towards wanting to break it. So it's one of those wait and sees, and expect a fast move on a breakout. If you get a breakout and a failed move, watch out for the fast move. Say you have a breakout above this level, it breaks out to 720, 740. then you want to potentially see a test back either at a 2/3 for Fibonacci retracement or previous resistance becoming support. Same true on the downside, breaking below, maybe it hits 580, 550, then you want to see it retrace the 2/3 or maybe find the previous support become resistance, which would be in the area of 655, and on a big move down here towards 630 area, which would be a level of support you may expect if it breaks lower. Third proverb writes, I'm certainly no expert, but if we compare gold-silver ratio to the highs in the 80s, silver should be more than double the price. I like silver because it will be easier to trade for smaller, more common purchases when the crash happens. Those who didn't feel the depression in 29 own gold and silver. And this is the ratio chart. And in 1980, the ratio got as low as 14 to 1. And there is other data, but for now, this is what will be available for today's video. A simple trend line got taken out in the 90s. And overall, when we take a look at this chart, we have this major level at roughly at around 49, 48 and change. That is the first Fibonacci level from this high and from the low down below here. It's all exponential calculations after all. The move from over 13 to barely over 100, which was the case in 1990, is a substantial move. If we take a look at these moving averages, the orange line, it represents the 50 or the 1,000 period moving average. I'm thinking based on the fact that it starts below here, yeah, it would be about 1,000 period average. Support was successful on one occasion, dipped below it, and found resistance before it made its big lows of 14. But since that point, it was able to recapture it and hold the support level until it started to break down towards this level in here. But since that point, it has stabilized through time. The stabilization would be this area in here. So it found support at the first Fibonacci level, and if we take a look at the average since the 1980 lows, which was support on the way up, was resistance towards, on a few occasions, crisscrossed back and forth throughout this range, recently went below it around 2007, 2008, and has thus become support. And since the highs, resistance, resistance, it pierced above it here as it has pierced above it again. So if anything, you could say that this chart would signify that it is ready for a breakout. There is a pretty big level, roughly at about this 80 mark, that has been resistance on many times. So overall, we're in a range. The range is from 80 to 48, we'll say. And within that range will give us, on a longer term perspective, a bullish scenario for the gold to silver ratio to remain higher, but slightly bullish or cautiously bullish. To get the caution away, it needs to get above this line, and you'd like to see it go above and then come back to that level as support before it obviously would take off. That's, of course, if you feel that it is able to do that. The fundamentals really don't signify for this ratio to get a lot higher. As I've stated, this is only a 40-plus year chart. If you consider what the ratio would look like in the early part of the 20th century, 19th, 18th, 17th century, and so on, it historically doesn't trade as high as this does. And if you're trading technicals and fundamentals, here's a spot where the technicals state that it's holding nicely since its major rally with this significant first price correction and then time correction. So because it's stabilized nicely, it says that it's looking as if it wants to break higher. Obviously, at a technical level, if the 49, 48 level breaks through, then that could give you a price target directly down towards this 30 area. But for now, if the fundamentals state something, the technicals will follow through. Fundamentals really don't say when something is going to happen on many occasions, and technicals really do tell you the whens. So if the technical or the fundamentals are correct that it's going to be breaking down a lot lower, then the technicals will follow suit when the time is correct. For we don't know what major innovations can happen in gold and silver, or and part of the innovations can be getting a massive supply. But that's the case, say, for example, in silver, that reduces the value of silver. And then you throw in the factors, how much of this is manipulated in? Should the correct price be somewhere within this range in here? There's a lot of variables one would need to decide to find out what the fair ratio would be. Continuing further with the gold to silver ratio, same chart, but a shorter period of time, starting from 1996 on forward. Recently, in 2008, there was a significant spike that seen the price of the gold to silver ratio go from an area where it was trading down towards here. So a range of about a 51 to 54. It broke the range and it burst all the way up to 85. And at that time frame, the trend line was for that of lower. This was a trend line at many different occasions. You may even state that it was an ascending triangle with a major support level here, which worked out to be that Fibonacci level posted from the previous chart. And emotion was the reason for this trade and surge to the upside. The emotion was fear, and the emotion was panic. Lehman Brothers was going through the collapse, and well, the markets, whether it was equities or the precious metals, took a huge dip. This time frame here, it was silver up to 21.35 and gold at 10.29. And things changed. Things changed. Gold retraced down to about a little under 700. That's about one third of its value. Where silver retraced from 21 and change to below 9, well over half of its value. And silver is more of a volatile metal, which can give it amazing for future upside potential. Because if 40% moves down and 60% move higher is really barely significant for silver. That's why I feel the big moves can be within a breakout of the dollar falling, thus this could reform this chart to going lower. And it's all about the fundamentals and the technicals. The technicals state that this wants to go higher. Fundamentals may say lower. So you have two conflicting results. Now, since this move to the upside, we can do some Fibonacci, which connects from this high towards this low, which gives us this point here. This is Fibonacci point 1 and Fibonacci point 2. Therefore, the 65 area has been holding as an area of support. The trend line for the upside right now can be something like that. That would be a pretty decent trend line, and the key resistance, of course, you got 85 as a significant level, but even now you can say 70 is a resistance area that it needs to break above, and Thus, a break of this trend line to the downside, you would expect some support to come at this key area of roughly 57, 58, all the way down to the Fibonacci level. But right now, it seems as if it wants to move higher. So maybe the fundamentals may state in 2011, 2012, 2013, or 2014 that it may significantly go lower. But as of now, the gold to silver ratio chart is showing signs of gold being better than silver and continually doing better than silver. That doesn't mean that that's what the fundamentals are, as if the fundamentals state something, the technicals will catch on later on down the line. On a previous video before I made this, I put up this chart and I said this chart is X priced in silver, or this is silver priced in X. It is looking to break its Fibonacci barrier with the price objective to over 80. I'll go over this chart this weekend or momentarily and tell you when the time is correct for you to sell. I didn't expect anyone to guess what X is on this chart, which is why I put the price on this one. Had B-Ball stated, this is silver priced in X. If it was X priced in silver, the 1980 price would be the low instead of the high. I figure this is silver priced in first class stamps. This is how many stamps you can buy with an ounce of silver. Right now you get over 40 with 1 ounce of silver. And I did this to show that this is another way of seeing silver within your buying power. You could do silver versus a pound of bacon, silver versus sugar, silver versus a cover of the Sports Illustrated issue, to see what maintains your buying power during different time frames. And I showed you earlier the inflation adjusted silver chart, and this looks very similar to it. And this is because this is one of the items that has also inflated in price, that being stamps. And back in the 1980s, we can see how we had a support level that held roughly around this 31 area. That got taken down right in the late 80s and has just now recaptured its previous support level. See, the CPI just didn't look right, and this shows even a little more. However, as far as the technical level is concerned, the moving averages, the first one, we can see how it's starting to roll over to the upside. So is this one. Therefore, we're seeing a lot of signs of silver becoming bullish and or getting back some of its destruction that occurred back in the 90s and 80s and early 2000s. That's basically how I'm viewing this as. And I said I'll tell you when to sell this. Well, you sell this when you need stamps. Now, if it's this time frame in here, if you need stamps, you may not want to trade silver for the stamps. You might want to trade dollars. But if the price happens to be way up here, maybe you may want to consider trading silver for that of stamps. Because when the prices are way up here, generally it is overextended for the price of silver, or stamps are way too cheap. Just like down here, either stamps are way too expensive and or silver is too cheap. That's the very basics of this. Thank you for watching the charts video. When doing research on any subject, including silver or anything else that is important to look at the information with an open mind while you question as much as you can for what you have been told. We as humans are figuring out many different things in this world by working together, by sharing ideas and trying to find other sources for similar discussions or information that may be used in contrary sources. This makes it easier for people to find the info they are looking for. This video will conclude with some comments on silver from other YouTube users. Going through some of the comments on silver, Dreader states, silver is one of the best ways to store value known to mankind. Other than in extremely rare stellar events, silver can't be created or destroyed. It is an incredibly useful element because of its unique properties and has been mined and used more and more in recent years to the point where many experts believe we will run out within a decade. Silver represents real money and a complete end to the slavery of fiat currency and the fractional reserve banking system. Da Vinci. Silver is the only commodity that has not seen a nominal all-time high priced in US dollars. I like silver because at a no-brainer low price, and everybody knows the saying of buy low, sell high, but they never do it. Nana Baju 62. Forgive me if I pronounced that wrong. Why do I like silver? Because it is an amazing element. Not only does it possess a unique antibacterial property, it also has the highest electrical conductivity of any element at the highest thermal conductivity of any metal. It is a gift from the stars, and our modern high-tech world would come to a grinding halt without it. Oh yes, and it's shiny. I like shiny. Deadman 12078. Silver has always had value and uses. Demand has always been there. The more technology advances, the more demand there will be. People like shiny things. It has longevity and can be recycled. Even kittens like it. Gold is the money of kings. Silver is the money of gentlemen. Barter is the money of peasants. But debt is the money of slaves. Don Bad Ajaz. Some names I can't pronounce. I don't recall you said that, but the reason I like silver, other than being shiny and pretty, is that it will keep me and my family from starving. I invest in silver as a safe haven for my wealth, and I gain a profit as a byproduct. Starfish quad zero plus another zero, or sank zero. Physical silver holders will be rich and paper holders will be poor. When the US dollar and other currencies collapse, plus silver is antibacterial, so you can touch it as much as you want. Okay, this 1984, L came and L stayed. Anything the powers that be don't want us to have, I want. Double smoothie. No one talks about silver in the mass media yet, which is another sign that it is a very good time to get in. Whitman 73. Silver is money, dollars just currency. Dave Ash. Silver is a risky investment. Also, if things go Mad Max, do you really think silver is going to save you? It's just a shiny piece of metal at the end of the day. I have some silver, but I don't buy entire vaults full of it because it's gambling. No one, and I mean no one, knows what is going to happen to the price of silver. You can only speculate. And I was recently doing videos on that of gambling. You're right, it is gambling. For gambling is risking something with an uncertain outcome. Therefore, whatever has no certainty is gambling. So if silver investing is gambling, then so would investing in fiat dollars. So would investing in gold or copper or palladium or platinum or investing in iPods in the hopes of selling them later. Everything would be that of a gamble to one degree or another. And you're right, it is speculation. But I see it as a speculation with very good risk reward, at least from the research that I have done. That's why I stated do your own research, make your ideas your own. For there's a lot of information that you're going to acquire that I'm not familiar with, as there's a lot of information I have acquired that you would not be familiar with. Moving on. Zappo Zap, we'll say. Silver is the metal of the future. Oil will become too expensive in the future, and electricity-based energy will be adapted, which currently only supplies 1%. The problem with batteries are too much weight, but the lightest are silver zinc batteries, like the button batteries in your watch, 90% silver. So solar batteries and electricity-based energy system will make silver the metal of the future. And that's the reason why I think it's got huge chances of breaking out into the 20s and 30s as solar energy and the energy systems come into play. That's my feeling. And that's from the research. There's a lot of research out there. Moving on, we got the Tin Man Double Zero, second season, third episode of Bullwinkle has King Midas. The people went on the turnip standard because everyone had turnips. Everyone but the king who had all the real gold. A gold standard currency would have to assume that the gold, which is 6 times the supply of silver, is being held by good people who have our best interest at heart. Silver is more like the turnips in the fractured fairy tale. We have it, we use it, we mine it. Sound currency will help the greatest number of the little people. I haven't seen that Bullwinkle episode, but I may do a Google search one of these days for it. Chuckle Milk. This makes sense to me as I feel that even in the current fake market, silver should be about 45 to 55 an ounce Canadian. I think most have stated the most valid reasons for silver being a good buy. For me, silver feels like the earth when I hold it. Gold feels like blood. Silver is the people's money. Gold is a tool of the slaver and the manipulators. It is their goal. I don't understand what you're trying to say with this. Maybe someone can enlighten me what this means. Go with an L in brackets and D. I see God. G-O. I don't know. I don't know. Maybe I figured it out right there. Stripe 64. I like silver because it's the cannabis of metals. I've always said this name is now as evolution, but it's now as evolavation. Nonetheless, as Andy says, silver is simply the most beautiful metal there is. Cheers. And finally, FX Norm. What is coming in the near future, you haven't a clue. Nothing will happen on 2012, 1221, except a lineup of planets. Big deal. Actually, that would be a big deal for me, actually. And a lot of things happen every day, but that's just moving on. The moon exerts more force over us than all the planets combined. The masses will freak out as that date approaches and passes, like they did at the year 2000. I never really seen people freak out in 2000, at least not where I was from. I never freaked out on it because I make sense of the situation and Y2K never made sense. What's coming is far greater than you could possibly imagine. I'd have to agree with that. This world as we know it is going to change as the depression gets underway. It's already under the way right now. The events will be astounding, and I think they are astounding right now, but we will be short-lived for a reason. Silver will be in great demand instantly when the recovery is shown to be failing. Well, currently the recovery they state is failing. Until that time, the silver price will just tag along with gold, unless folks start demanding delivery. When the economy is perceived by most to have failed at a recovery, the masses will start to show great interest in silver's value as money, not as an industrial metal. Silver will break its all-time high soon, and when it does, it will suck in many new players that fear the unknown. Get ready for a wild ride. So these are a bunch of different comments. After all, many people have their opinions, their facts, their documentations, and when we together can try to figure things out, and that's when society can move forward. Because we see the game we have today of fiat dollars and equity markets, and we're being told that the risking of stocks is that of an investment. Some may agree that it is, some may disagree that it isn't. And some may say that it is counterproductive. That's why we together as humans can work together and try to come up with sensible answers and sensible solutions for making this world a better place. And this part of the video was to try to figure out if silver would be a better currency than that of fiat dollars and the others listed within this video. Have yourself a magnificent weekend. Bye-bye.